Hey, everybody. Welcome back to episode number 30 of the Real Deal Pod with Allister and Geoff. It is an absolutely gorgeous, sunny autumn Wednesday afternoon. I just got back into the office here. I was shooting videos and drone of a new listing that's coming out next week in Surrey. So I'm super excited about that. Geoff, my man, how are you doing, buddy? How's your sunny Wednesday?
Yeah, you know what? I'm in my glass prison here. I'm looking outside, seeing how beautiful it is, and I'm like that cat from the door, just trying to scratch on that glass, trying to get somewhere.
It's
But you know what? It's being inside the glass prison is good. So yeah, it's just banging away and getting her done, as they say.
it's not that bad, right? I'll tell you, man, when I was shooting the video today, I was outside and I was looking around. I'm like, man, this is I love autumn days like this
Yeah.
where it's not crazy hot. It's still because it was 9 o'clock in the morning. It was crisp still, but it was still warm. So and the colors are beautiful. It's a beautiful day, man. This is one of those days that you love.
The transition into fall and the colors and
Yeah.
some of those who hike out there, the larches and it just oh man, it's a beautiful time. Fall is one of my favorite seasons. Winter is one of my favorite seasons. I'm a fan of all seasons. We talked about this
Yeah.
before. I don't think I'm the type of person that can just handle one season
Yeah.
365 days a year as much as it would be nice to be in a hot climate. I like my seasons. So
I'm the same way as you, as somebody that gets out and goes hiking and walking a lot of the time. That's what I love about the seasons is being able to do that and just see the change even, right? As
yeah.
you're going through it and stuff like that. That's what makes me just appreciate every season, just being able to walk through it and see how your environment changes and really just loving the environment. It's awesome.
Yeah, 100%. 100.
Yeah, man. So, dude, what do we got on tap today? What are we chatting about?
Well, I wanted to talk about a mortgage product out there to high net worth individuals,
Hmm.
and just to kind of again discuss on what net worth lending looks like, what net worth lending is, because again, there's a lot of people out there that may not be qualifying based on their income levels for whatever reason,
Right.
but they do have a fair share of net worth and that they can qualify for the net worth program. And I wanted to say, hey, like this is another one of those mortgage products that are available. This is another one of those mortgage products that could be utilized to some of our listeners. But again, this is also another one of those mortgage products that a lot of uh, lending partners, mortgage brokers, bank specialists just aren't aware of. So again, I always tell people, we want to be a big firm believer in turning no's into yeses. And again, net worth lending can turn a no into a yes if you're familiar with it.
That's awesome, man. So, well, let's get into it then. Like, how does it work?
Well, here's the reality of it is net worth lending isn't for all people. So the one thing that we need to understand is with a net worth program, you have to be able to have a liquid dollar for every dollar that you don't qualify for.
Okay.
So again, when we're doing net worth lending, the first thing that people will always ask is, well, what is my minimum down payment, right? And the minimum down payment, depending on the lender, can be anywhere from 20 to 35% down. And then what you have to do is you have to qualify with the down payment. You have to qualify as you normally would, looking at income, looking at debts. And then basically, if you're not what they call debt servicing, you have to have a dollar for every dollar that you don't debt service for. So let me paint you a picture. Somebody comes in, is buying a property for $1 million.
Right.
They're putting down 20%, let's say 200,000. So now they're qualifying for a mortgage of 800,000. So again, based on just traditional debt servicing, we take a look at income, we take a look at debts, And say, for example, they only qualify for $600,000, but they need an $800,000 mortgage.
Yeah.
So what we then look for is a $300,000 of assets that are liquid. And if you have that $300,000 of assets, because that's the amount of money that you're not qualifying for, if we can show anywhere, and again, depending on the lender, anywhere from 90 days to 365 days, and we can show that $300,000 of liquid net worth, all of a sudden you're turning that no, you're not qualifying into a yes because you have a net worth component uh, to your assets.
Okay, that makes sense.
Yeah, well, and again, the reality of it is that this is a product that's out there for people. This is a product that not every lender uses. For example, Scotiabank has a product for net worth lending. National Bank has a product for net worth lending. Royal Bank of Canada has a product for net worth lending. But there's also other lenders that don't. So depending on who you are working with as your lending partner and or as your mortgage broker, you could actually be qualified for a net worth lending if you have a large amount of liquid assets, but perhaps the person or the individual that you're working with is working with an institution that either doesn't offer it or they're just simply not aware of it.
Okay. Okay. Well, how does it differ from, let's say, then refinancing?
Well, the thing with refinancing is you're qualifying based on your income and your debts as normal, and you're pretty much just restructuring an existing mortgage that is already there. So refinancing is you already own a property, you're basically trying to tap into the equity of it, and you're qualifying as normal with what you're earning for income and debt. Net worth lending is again when you're purchasing, and then when you're purchasing something, again you're qualifying on it with your income and your debts. But for every dollar that you don't qualify for, if you can show, again, depending on the lender, 90 to $365 of liquid net worth, then again you can turn that no into yes. And you can also do that for a refinance as well. So for net worth lending, you can do that for purchases, you can do it for refinancing. But again, when you just talk the simple word of refinancing,
Right.
again, based
That's
on
what I was going to ask. I was going to say, like, how does it compare? Can you use net worth lending as like an alternative to refinancing? I guess maybe should have asked that better. That's what that actually meant.
yes. So if somebody is refinancing, and again they have net worth, liquid net worth, they can actually use these programs when they're refinancing as well.
Okay,
Yeah.
that's cool. That's something important to know as well.
Well, we've talked about these unique mortgage products that are out there for people because everybody doesn't necessarily qualify based on what their income is and what their current debt load is. But there are these unique mortgage products that are out there, such as the net worth lending program, such as the reverse mortgages, such as the stated income. So, but again, if you're not working with a lending partner that's familiar with these mortgage products and or can't offer these mortgage products, you're really going down a financing road where you don't need to. And what I mean by that is that, hey, Allister, you're not qualifying, but you have a large amount of liquid assets. Maybe this person that you're working with isn't familiar with it. Now all of a sudden you're going to a B lender, you're paying higher rates, you're paying applicable fees, or even worse, you're going to a private lender. But hey, because they're not familiar with these products, you could have stayed with a bank or a credit union
More
with
traditional.
best discounted rates and no fees. And we see
Right.
it all the time.
And that's what I was going to say. That's the biggest miss is that just would have cost me, right, a whole buttload of money
Yes.
by paying a higher interest rate when, with talking with a trusted professional, somebody, in my trusted power team, they could have saved me by letting me know of these alternative vehicles, right?
Yeah.
It's
And
crazy.
like I said, also we see it all the time, right?
Yeah.
And the thing is that the reality of it is that many of us don't have that liquid net worth component that we're looking for. But
Yeah.
there are self-employed people that, again, as a self-employed person, we all know that we are not reporting. We're not reporting a lot of income because there's a tax strategy behind it.
Yeah.
It doesn't necessarily mean you're not able to basically afford what you're trying to do, but based on paper, because you have a tax strategy, you're not going to qualify. So again, for any self-employed person that has a large amount of net worth, again, this is a mortgage product that can work for them, right?
That's amazing. So then what are the steps like so what are the steps to qualify then? So if somebody wants to go about this, what do they need to do?
It's just like anything else. In order to qualify for this particular program, is do you have liquid net worth? And then people will say, well, what is liquid net worth, right? I worked on a file. An individual was saying, hey, I own a property. It's a rental property, or I own a property and it's worth $1.2 million and I don't have a mortgage or a line of credit on it. Is that liquid net worth? Under a net worth program, that isn't qualified as a liquid net worth unless that property is being sold.
Is listed. Okay.
Is listed and being sold, right?
Right.
So again, a lot of us are equity rich, cash poor. But again, when it comes down to net worth lending, if you're owning a property, the equity within that property isn't qualified as liquid net worth because it isn't being sold, or it isn't, it isn't being sold.
Yeah.
The other thing that qualifies for liquid net worth is registered assets. So RRSP. So do keep in mind, if you have $100,000 in RSPs and you're using a net worth lending program, they will usually take 30% off of the book value because there will be a tax implication on it if you were to withdraw it. So again, that $100,000 of RSPs really in a net worth file is really only worth $70,000, right?
Right.
It can be money within holding companies. It can be money within your incorporations. It can be stocks, bonds, and investments within your investment portfolio. So anything that is liquid basically is considered net worth outside of the equity within your home, unless basically you have a firm and binding sale on it.
Right. Okay. Okay, so that's interesting though. It has to be it has to have a firm and binding sale. So let's say a person has a property up for sale at the current time. They can't use that as liquid assets because it's not under contract to be
It's
purchased.
not sold. And just because it's on the
It-
market doesn't necessarily mean it's sold. So
right.
again, what happens if it doesn't sell? It's not money in your pocket.
No, it's good. It's just again an important thing to know because there's a lot of times that clients will say rather than putting something subject to sale, let's say we'll put it up on the market first, right? And we'll look at a home while we're selling it. It's a good thing to understand though, while still going through that process that money, even though it will eventually turn liquid, as we say, it's not yet, right? Because it doesn't have a contract. It doesn't have a contract of purchase and sale behind it.
Well, exactly. And the other thing, as you're talking, I was thinking, you can use a net worth program when you're purchasing a second home. We talked about that last week or the week before.
Last week, yeah.
You can use liquid or a net worth program when you're purchasing rental properties, right?
Yeah.
And you can use it when you're also refinancing. So again, many of us can be in a situation where we're not qualifying traditionally, but again, if we have a large amount of assets that are considered liquid, again, it turns you going into a B lender or a private lender coming back to a traditional bank and or credit union. So the other things, again, when you're asking me, Alistair, as far as to qualify, number one, assess your assets, right?
Right. Yeah.
Are you even going to qualify for this program?
Yeah.
The next thing is you need to be working with I'll put the plug in because I'm a mortgage. You need to be working with a mortgage broker, or I like to call them a lending partner that really understands mortgage products, right? how many times have I said to you is if you have a great job, you have very little credit, you have a decent down payment, your 7-year-old kid, Alistair, can
Yep.
do that mortgage,
Should be able to put it together. Exactly.
right?
Yeah.
But when it comes to when you're not qualifying based on your income, and you're not qualifying based on your credit, or you're not qualifying because you're not fitting in that traditional sandbox,
Yeah.
this is where you need to be working with a mortgage partner that really understands mortgage products that are out there, right?
Yeah. Yeah.
The next thing is understand that you need to show anywhere from 90 to 365 days of financial documents. And again, every lender is different, right? So some lenders are going to ask to see 90 days of investment statements to qualify for that liquid net worth. Some are going to want to see 12 months. So
Can I
again,
just pause? Can I pause right there and just ask a quick question that I know every client out there will say? Why is one different than the other?
I think it's like anybody's household. Like, why are some household rules different than the other? It really is dependent on what the guidelines are within that financial institution,
Yeah.
right? I'll use Scotia Bank as an example. With their net worth program, at one point you needed to show 12 months of financial documents to verify the liquid net worth. Today, you only need to show 90 days to qualify. And I think lending institutions will change because it all comes down to competition, right?
Yeah. So that's what I was
So
going to say. It's costing them money, right? Like it is costing Scotiabank money by making their clients show 12 months of documents when, let's say, TD, RBC, CIBC are saying, no, you only have to show 3. Well, who's going to win, right? Where is a customer going to go to? They're going to go to the easiest serve,
yeah,
right? The
the
easiest
the
one for me,
biggest struggle,
least
the big
the path of least resistance is what.
exactly, like one of the
Yeah,
biggest struggles of doing a mortgage is the document collection for borrowers. It's painful, right? For me, it's like, it's no big deal, but I'm doing it 365 days a year. This is my sandbox.
right.
But when you're doing it once every 5 years, or once every 3 years, or once every 20 years,
Hmm?
it's a stressful process.
It's
So
daunting.
yeah,
And it's painstaking. Like people can get super like anxiety. The anxiety can build up super high, saying, "Oh my goodness, I got to pull together 12 months of financial documents and da 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 da." So when you do, again, going back to that, you say no, 3 months instead.
yeah.
Just in the human psyche, that becomes so much easier and so much easier to manage.
And sometimes maybe you don't have 12 months
Sure,
of verification. Maybe you
that's
just
true
came
too.
into a windfall 4 months ago,
That's a
right?
good point. Yeah.
So every lender is looking for something different. And again, that's the important thing, is to always make sure and understand that there are more financial institutions that offer the net worth lending than just the one, right?
Right.
But again, if you're not working with the right lending partner,
Hmm.
and or they are not familiar with other lenders' products, or they're just not able to access them,
Yeah.
and again, how are you being the client being best served? You're not,
You're not.
right?
You're not. Yeah. Exactly.
So yeah, and again, the takeaways that I really want to do on this is that for people that are not qualified, and again, that could be self-employed people, that could be people that are retired, that could be just individuals that have been great with their money through their lifetime of work, and that have just saved, or they purchased and sold houses and they just have a large amount of liquid net worth. Like, one of my favorite stories, Alistair, is I was working with these two folks. They were working in a retirement home. They were there, each of them were there probably for 15 years plus, making about $60,000 each. Like, not a huge amount of money. But these folks, what they did with their money, they lived well within their means. they budgeted awesome, and they purchased property at the right times and sold it at the right times, and basically created themselves a revenue stream with rental income that surpassed their employment income, right?
Okay.
And
Yeah.
in doing so, flipped properties along the way. And these folks' net worth is probably one of the largest net worths that I've seen. Again, having a joint family income of 120,000, to some individuals and files that we work on where their income is well over $500,000, but their net worth is not anywhere near where it should be. And it's just purely because of how they manage their money throughout the way. So again, for these particular people, if they wanted to continue buying rental properties and they weren't able to qualify based on their $120,000 of income, they could rely on this net worth program, because for every dollar that they didn't qualify for, they had liquid net worth to access this mortgage product.
That's amazing. That's awesome.
Yeah, it's one of my favorite stories to tell when I'm in settings, as far as, hey, you don't need to be making hundreds of thousands of dollars to be successful and create a high net worth. You just need to be smart with your money and invest your money where it needs to be and live well within your means, right? And if you can do that consistently year after year after year, you will get there regardless of the income that you're making, within reason.
That's awesome.
So the other takeaway, down payment, how much do you need to put down? Anywhere from 20% to 35%, again, depending on the lender. Documents that you're going to need, again, depending on the lender, when it comes down to to qualifying for the net worth and qualifying as far as what those assets looks like, it's anywhere from 3 months to 12 months. And again, we can do this when you're purchasing properties, be it your primary residences or rental properties or vacation homes, and you can use this program when you're refinancing. So again, just another one of those mortgage products that are available to people that is not necessarily spoken about a lot. But hey, since we have this fantastic pod, we're here to educate. And like I always say, making yourself that 1 degree difference than somebody else.
Right? Exactly. Exactly. That's awesome, man. That's awesome. Well, man, that's it.
That's it.
To ask you, do we have anything else to say? I something just came across. So I don't I recorded it. It was actually the debate that they're currently having. The party leaders are having a debate right now. And of course the housing is as the housing plans was a big topic. Um, of course, they rolled out their plans, but of course they're very sketchy.
Yeah.
They didn't say very much about it. I just so that's what was coming down the pipe as we were going to the end of this. So I was like, whoa, do I want to add this into the end of our pod? Do we want to work this for next week?
Let's talk about that. Here's the thing. The great thing about election years is that they all of a sudden come up with these fantastic policies.
Yeah.
But in essence, they're really kind of buying their votes. So within the mortgage industry, there's been a lot of policy changes here within the last 12 months. And you know what? We should probably do a pod on that just to summarize what those policy changes are. But the most recent one that's coming out is able to refinance up to 90% your home,
Okay.
providing that you are using that money to basically put in a basement suite within the home that you're living in, right?
Right.
So as we know, or as some of us know, right now the maximum amount that you're able to refinance is 80%.
Yeah.
But what has been now introduced, I think this is as of today or as of shortly, is the ability to refinance to 90% loan to value, which is huge
Yeah.
providing that you're putting in a suite in the property that you're living in.
Yeah. Here's another one that I guess is the big one for Ebby, is that I guess first time home purchases will be able to be financed. Well, the proposed financing 40% of first time home purchases for middle income earners.
Come again, one more time.
If you're a middle income earner, there will be proposed financing of 40%.
What does that mean? I'm a little.
I'm not sure. I'm trying to find
I
where.
see you reading it, but
Yeah,
I'm like,
just give me
okay.
a second. Yeah, let me get the whole thing right here. A highlight of the NDP's housing plan is for the province to finance 40% of the cost of a first home for middle income earners at a low interest rate. The program would apply to 25,000 newly constructed units. Buyers would repay the government loan when they sell the unit, and the province would be entitled to 40% of any increased equity in the home.
That's very similar to a product that CMHC rolled
He
out.
has right now.
Yeah.
Yeah.
And,
Yeah.
and again, at the end of the day, very few people utilize that
Use it in
program.
the first place. Yeah.
Yeah.
Rustad has his $900 million plan, but there's no real specifics across the board on it. It's just
Yeah, I haven't heard much about that. Again, I know CMHC they actually no longer do it from what I understand, but CMHC had a program where they actually matched the payment
yeah.
of up to 10%. But then they owned, I think, 25% of the home or 10% of the home that needed to be paid out within 25 years of doing it. At the end of the day, it just wasn't well received, right?
Yeah, and I think that's really at the end of the day, this whole thing is that what drives me nuts, and I'm going to put on my ex political studies hat. I graduated my degree in political studies. I did run for MLA when I lived in Winnipeg. One of the things that frustrates me when we're going throughout this process of elections is the lack of specifics, and that's what voters deserve. Voters deserve specifics. So it drives me bananas, and it doesn't matter which banner you fall under. It drives me nuts when all we do is make promises, right? But how these plans actually deliver financial relief to any of us, it's always a mystery. And it drives me nuts that there's never any specifics on how that's going to be taken care of. So I love us all throwing up these plans of financing 40%, whatever that is going to look like, a $900 million plan to solve the country's woes and all of that sort of stuff. What everybody just needs to understand is that will never be solved until we alleviate the lack of supply that we have throughout all of Canada. It's not just British Columbia, it's throughout Canada. We have a lack of inventory, right? We have a lack of supply. We don't do enough building for the amount of permanent residents that we have enter our country, which is needed, right? When our population isn't growing organically, that's why we have to open the doors for immigration and invite our beautiful immigration in that makes Canada the wonderful quilt that it is, right? That is the reason that we have to do those things. So when we do those things, we have to make sure that we have the infrastructure to support all of these initiatives that we put forth. That is the things that we don't do. And then we start making up lies, and we start making these grandiose plans. At the end of the day, they don't happen. So that's why I call them lies, right? and there's literally no specific for the voters. So the voters just have to, I'll pick which one sounds better. $900 million plan or 40% in financing somewhere, some shape. And I have no idea how any of this is getting repaid.
Yeah.
Right? Well, that's at the end of the day. Right. So that's my soapbox. That's my rant. I'm sorry for taking us on a different course.
You took us there.
I knew it was going to go this way. But no, that's awesome. That is awesome. Thanks so much for that on the on the lending, because that is, something that people don't know. The other programs that are out there, again, that are alternative to refinancing, even that, right? Like it is important. It's not it. I know you always joke around and say, you've got an easy job, you've got this debt, your 7-year-old child can do your mortgage. But the thing is, and you're different. Maybe you can tell me differently. I don't believe that there's a lot of people that just fall into that, right? So I believe that there are more people out there that need the help of a trusted professional than there are people that their 7-year-old child can do their mortgage for them. Yeah. And that's why I will always say how and pound the drum on how important it is to listen to something like this, right? Ask those questions that when you're sitting down in front of somebody that's supposedly your trusted person. Man, roll back the tapes to our pod and start asking them some of the questions that we answer for you, right? And start just testing to see if those people know as much as what they're claiming to know. And if they don't, run run far away. You don't have to run to us. We'd like you to run to us, but if you don't run to us, just run to somebody else and start asking them those same questions that other person couldn't answer, right? So that you make sure that you're always getting the best advice and the best guidance possible.
Yeah, well said.
Yeah, man. Well, man, that's it. I want to wrap up this amazing Wednesday. Thanking again everybody for taking the time to tune in. Thanking everybody for taking the time to like us, love us, share us, download us. Tell everybody in their closest circles that they should be listening to us a little bit even when they're not thinking about doing business, but just thinking that, hey, man, they want to hear some two crazy people, one realtor, one mortgage broker, talk about crazy stuff, make laugh and have fun. I like to say that we bring that to this space, and I love all of you guys for coming out and listening to us. I hope all of you guys have an amazing Thanksgiving. Yes, in Canada out here, it is going to be Canadian Thanksgiving coming up. So I hope all of you guys have a wonderful one. Enjoy the turkey, enjoy whatever you enjoy eating.